Good evening. This is Jack from Charting Markets, and this is the Bigger Picture webinar for the evening of Wednesday, the 18th of December. My disclaimer, I did this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take somewhat of it, learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right, okay, well, I did a post this morning talking about the inflection point we're in here, and really, I thought it was probably going to break up if we got the quarter point reduction that the Fed had promised, and they did actually deliver that reduction. But they also delivered advice that there would be one or two similar rate cuts next year. Now that was not what the one market wanted to hear, and obviously we went down hard, and it was a very, very strong move. So in terms of where we are on levels and so on, it's probably best to talk about that on the bigger picture chart. But what I would note on ES and SPX is we've reached a possible head and shoulder neckline area, and I do think there's a pretty good chance we're going to see a bounce here, and it might last 2 or 3 days or even through the Christmas period. All right, let's have a look on NQ. Nice move down as well. We pretty much settled all the negative divergence here. NQ obviously had been Nasdaq and tech had basically been carrying the market on this way up. So actually we had the odd thing where SPX and Dow and IWM all basically tested their 3SD lower bands, daily lower bands today, whereas Index tested the daily middle band. It's so this was far stronger, but obviously still came down an awful lot. On RTY, we had made the possible near miss target on the buy signal, and then it's got down to a pretty low level, and it's coming back in to retest these lows from the beginning of November. All right, YM. We'd had a buy signal again that had made the possible near miss target. We broke up slightly over the declining resistance and then failed hard. I do have some targets on this on the RTH chart, so I'll get to those. DAX, we already had a double top which had broken down. That made target, got down to the 20,000 area, and on ESTX. Decent move down, and this no longer looks like a bull flag for me. All right, great. This was a significant move today, and I'm expecting it to follow through to the downside, but I'm a bit doubtful about that happening immediately, or at least normally it wouldn't. So let's have a look through that. Now, on the weekly chart, that monthly chart, we're still way above the daily middle band, which is all the way down in about the 5100 area, slightly below. On the weekly chart, I am wondering about a test of the weekly middle band, and I've got that currently at 5775. We do have sell signals brewing here. I haven't marked them as fixing yet, although this one would have fixed if this was a Friday, but it's not a Friday. And the only time these sell signals can fix, because of course the RSI can go up if there is a rally, is at the end of the week. All right, looking at the looking at the 45 DMA chart, we went straight through it. We hadn't really got up to a level where I'd even marked it in anything over 4%. Really, this hadn't really gone up high enough to bother marking it in yet. On ES, the weak RSI 5 sell signal made target, and it made target again on the SPX daily, and we got just shy of, but pretty much within a few handles of the 3SD lower band. Now, this is something which will usually trigger a rally. Not always, but notice where we are. I'd marked in a possible head and shoulder neckline here in the 5850 area, and we almost made it. The low was at 58.68. I'm thinking could see a slightly lower low tomorrow morning, but the chances of seeing a rally in this area are pretty good. And we could then be forming a head and shoulders, which then on a subsequent break below 58.53, would have a target that would be, what would that be? In about the 5600 area. And that is not a million miles away from where I've got this main rising support trend line, which I'm thinking we may be heading for. This is the rising support trend line from the low in late 23. All right, looking at the hourly chart, so we had an open sell signal that made target. The short-term rising support, we went straight through. Now, This is a rising wedge, and it's quite a nice one. And it's broken down. Now, if we are going to see a decent retracement here, then ideally we'd be heading down to something like the 5600 area, because that is the 50% retracement. So if we set up a head and shoulders here, that would be a pretty good way of reaching that target. On the 15-minute chart, very oversold. We had a buy signal in the morning that reached the possible NMS target, and then it went down. Now, I did warn that these triangles, they're nice and they break up 70% of the time. 30% of the time, they break down. I haven't put in the arrows for the target on the breakdown because we made it and went right through it. But you can see, again, we're reaching a potential head and shoulder neckline in the 5850 area, and we almost reached it at the low today. Ideally, we'd go just a whisker lower tomorrow morning, build up a bit of positive divergence and go up. We could do that, although quite often we would just rally directly from that low. All right, nowhere near the weekly middle band. On the Qs, we reached and tested the daily middle band, and we basically closed on it visually. So marginally below, but is normally I would expect to see it close above tomorrow. So that is a test of the daily middle band, but that's rather undermined by the fact that we've now got three of the other indices, which basically tested the 3SD lower band today. On the hourly chart, we had an open sell signal that made target. We're pretty close to this rising support trend line, which is probably going to hold for now, but probably not going to hold longer. As I think chances are, we're going to see some follow through to the downside after a rally. We could see that. We could see that directly. On a very strong move, you will see it go through the 3SD lower band and continue. But it has to be a very strong move. And that was a very strong start today, but I'm just a little doubtful about seeing that in December. So we'll see. Generally speaking, the daily 3SD lower band is a pretty strong buy. All right, Dow, monthly chart, no negative divergence. Weekly, we got some negative divergence, and we're testing the daily middle band, and this would have fixed if this was Friday, but it's not Friday. On Dire, the sell signal had already made target, and we actually, the close was at 424.22, and the 3SD lower band is at 423.67. We'd been a little lower, but that was basically a full touch and slight break of the 3SD lower band. Again, generally speaking, I would be looking for a rally. On the hourly chart, no current positive divergence. Is this a double top that's broken down? It's not great. But maybe. I'll come to the one on IWM, which is a rather nicer one. And here, nice rising wedge. It has this possible flag channel that obviously I mentioned was very, very, very tight. So it doesn't really look quite the way that a bull flag channel should. This is broken down, and I've not marked it in. Sorry, I thought I'd marked all these arrows in, actually. This has a target because obviously, had it been a bull flag, it would have had a target back up at the high. But in this case, you take the pattern and you measure it up from the break. And you take it down. But there is a rule here. The target can't go below the preceding low. Or at least the target can't go below that. I mean, obviously the index can, but the target limits out at 416. So we've now got a target at 416, and I've got another one that is not dissimilar on the IWM chart. So let's have a look at that. All right, there you go. Okay, on the IWM chart, weekly chart, we're slightly below the weekly middle band. On the daily chart, we went down and we tested the 3SD lower band. I think we closed quite a way below it. No, just a bit below it. I had that closing today at 221.57. We closed slightly below it. And I would be leaning towards seeing a rally here. That would be usual. Do you see instances on this chart where we touch the 3SD lower band and continue going lower? Yes, there's one here. Didn't go an awful lot lower, and we were sort of bottoming out. There are other instances here too. But generally speaking, you're going to get some kind of bounce or the start of a reversal. We will see. All right, so the sell signal here made target on the 60-minute chart. We didn't have any divergence, but we have broken down from a nice looking double top. I'm mentioning every day on the video that we had a pretty decent looking double top here, and that has broken down. And that's got a target in the 206 to 209 area. That's below this rising support, and it's slightly above the 50% level, which is basically in the 202 area. Looking at the 15-minute chart, I've got a target here too, and that is this was a pretty nice looking falling megaphone candidate flag, and this has broken down, and that's got a target too. That target is in the 213 area. So really what we're looking at here is a target range basically between 208 and 213, and we closed today at 220.84. So I'm looking for follow through to the downside, but I'm just not really expecting that necessarily tomorrow. DAX, I haven't marked it in, but we've got weak sell signals fixed here. They're only weak ones, and RSI 14 particularly could go and make a higher high instead of a full size one, which would be a better signal. Here we're still a long way above the daily middle band, but that's probably going to fall more overnight. On Nikkei, if Center has left the building, which it appears that Center has, then I'm not expecting to see this retest of 42.4, which I was hoping to see. I am thinking we might see it later. I mean, really, the Fed didn't say anything that wasn't pretty obvious today, if you thought about it. The fact is, we've got inflation. The inflation numbers don't look great. It's above the target area. It's heading up. And the other thing is, if you have a look at the, I mean, there's a general fiction that the Fed sets interest rates, but it doesn't really. Really, long-term interest rates are the 10-year interest rates, and those just hit 45 today, and they've been as high as 5% in the last year. So, I mean, they can't get too far away from that, otherwise it starts to become the fiction that they actually set interest rates starts becoming a little hard to sustain. So I'm thinking this is probably on TNX heading up. Sorry, it's a little earlier than I was expecting, but I'm expecting that to go up and retest this higher here at 49.95. At which point we've got another decision to make, and it may actually break higher. But I will come to that. All right, looking at the Nikkei chart. Looking to see more downside. Not got any real targets for that. This isn't a head and shoulders. Could be a double top possibly, but it's not a high quality one. So I don't have an obvious place for that to be going. So I'll keep an open mind, and no current divergence either. All right, let's have a look at CL. Okay, CL, I was mentioning when we got up to 71 that we were pretty much at the top of the range, and I was thinking we might just head down to the bottom of the range, which would be currently in about the 67.50 area, and I think we might well be doing that. No decent pattern to get us there, really, although arguably this is a head and shoulders. So if we see a sustained break below 68.69, then that would have a target at about the 66.70 area. So down here, we will see. I still have an open triangle target in, I think, the 63.75 area, or 63.57 actually. All right, NG. Obviously, we're in a seasonal downturn till April, and at the moment, I'm not seeing anything really strongly suggesting that that isn't going to deliver. Let's have a look at both of these on the bigger picture charts. Okay, let's have a look at CL first. CL, no current divergence. This is a long consolidation, and I think it's a long consolidation before we go and test this target here, which is the 63.57, and this is the target for this triangle that broke down. We've been taking a while to reach it, but we, as long as we're staying under the 200 DMA, which I've got in the 76 area, I'm expecting to see that made. We will see. All right, nat gas. This tends to have a downtrend that ends, that ideally ends in the April area, and you can see this happen quite a lot. You're seeing a big downtrend here, obviously in the beginning of 23. Where does it bottom out? It bottoms out in April. 2024, it bottoms out in February, but it's still barely above the low in April. I mean, it's a strong seasonal thing. It tends to rise in the winter, and it tends to bottom out in late spring. And so I'm kind of expecting that. And actually looking at the pattern setup here, left shoulder, right shoulder. Perfect hit of the possible inverted head and shoulder neckline. I think the obvious thing to happen here is that a right shoulder forms, that we decline into, March or April. Ideally, we get down into about the 1.95 area, but we don't need to get that low. And we just form a right shoulder for about 4 to 6 months, and then we break up. And if we see a sustained break up over 3.64 at that stage, and then that would have a target in about the 5.8 area, which would be a nice move. And on the bigger picture on natural gas, isn't anything for the history books. That would get us to here, which would actually be the 50% retracement of this move down from 10.03 to 1.52, almost exactly. So I'm actually really liking this setup, and I'm thinking that might well deliver. It could be that we're going to break up earlier than that, but at the moment I'm liking the inverted head shoulder scenario best at the moment. So we will see. If we see a sustained break up over 3.64, then we might be breaking up earlier, and this could be an asymmetric double bottom. All right, let's have a look at metals. Now, metals are interesting today, and this is something I've been saying, I think, in the last bigger picture or the one before. And what I've been saying is that this was a wedge. The obvious target for that wedge was a retest of this low, and on the bigger picture, I thought we could see lower lows because this would be an A, B, C flag. And at the moment, well, I'm thinking that might be exactly right. SI, I was saying we'd probably failing the double bottom, and that has fully failed. We've gone back to the prior low and gone below it, so that has officially failed. And I think I'm going to get to the dollar, but I'm thinking we might see quite a lot of strength, and I've got a theory as to what might be happening on the dollar, which is that we retest the high in about the 114.5 area. And I've seen some wild retests over the years coming from places you wouldn't have expected to go back and retest high and set up a reversal pattern. And I'm just thinking this may well be one of those. And we certainly made a decent move towards that today. And as the dollar spiked up, these came down. HG, I was looking for a retest of this low here. We're getting close. So I'm still looking for a retest of that low. I don't think any of these are done to the downside, but let's have a look at those on the big picture charts. GC, we saw a decent move down. We haven't got below the 25.65, but you can see I've drawn this trend line here, and I'm thinking A, B, C. Now, ideally, that would probably get us down into about the 50% area, 2450 or 2500. There's a couple of decent levels here. I've got no obvious reversal pattern here. This looks more like a flag forming. And I've got a rising support trend line here currently in the 24.25 area that would make quite an attractive target, and we might be heading there. On the weekly chart, I've got the the weekly middle band at 26.37, so that's pretty early on the way. But we've got some decent support levels down here. 200 DMA I've got here in about the 2070 area, and on the daily chart, I've got the 200 DMA in the 2477 area, and that is an obvious area to go back to. I'm just leaning towards this thing being at least a retest of this low and probably a bit lower, and I'm leaning towards this being an overall bull flag forming while the dollar is rising. All right, silver. There's a possible head and shoulders here, but it's really not high enough quality for me to have done more than mark in the neckline. We've gone back, and this double bottom has failed, and I'm thinking we might be looking at an ABC. So in terms of where that ABC might be going, I am thinking that we might get down to this support level here in the 26.5 area, but ideally it would be there or somewhat above there. First, though, we need to get through the 200 DMA, which is basically where it closed today. Looking at palladium, I was looking for a retest of this low, and we've seen it. We've got a potential level bottom here, but I'm thinking it might head lower. Platinum, we've had a nice level bottom set up for a while, and it's done absolutely nothing. Might need to go a bit lower, might not. But I think they're both in a situation where they're actually not in a bad pattern setup to break up if we see metals reverse, but I'm not really thinking that seems immediate. We will see. I mean, there are various places where the dollar could be heading, but on the more extreme level, then we could see significant further downside here. All right, HG. HG hasn't quite made it back up back to the retest of this low, but I think that's probably where it's headed. And we will see how that goes. In terms of the overall pattern setup here, not clear. Could we be heading for 3.921 to make the second low of a double bottom? No, this went too high in between. It wouldn't make a credible double bottom. But I think if we go and retest this low here at 4.002, that could make a decent double bottom. But with the resistance would be at 4.335. We will see how it goes. All right, GDX and GDXJ, leaning towards seeing a retest of the low. I was leaning towards seeing a retest of the low here. We've seen it and gotten a little lower. Decent looking support levels here between about 33 and 34. Which I would be watching. GDXJ, we retested this low as well, and we will see where it lands. But I'm leaning towards this being ABC flag here as well. We'll see. All right, great. Let's have a look at ZB. Now, ZB, I've been talking about the failure of this double bottom here, and it hasn't, I don't think it has failed here. It hadn't quite failed when I was looking at it this morning, but it's definitely failed now. I was talking about this resuming the downtrend with really a target probably in about the 105, 106 area. We'll have a look at that on TNX, but first, let's have a look at the dollar. Now, the dollar, we broke up from a flag here. I've been talking for days about a likely retest of this high, and we made the retest of the high today. And why did it do that? Well, because the Fed was basically saying that interest rates are going to remain above 4% for the easily foreseeable future. That has pushed bonds down, as you would expect, and bond yields up, as you would expect, because this is, for the last few years, historically, current rates are actually pretty low. Over the last few years, people got used to being a lot lower and were thinking they might be heading back there. I think that is unlikely. We've come back and retested the high here on the dollar, and we got a potential double top here. And I'm thinking it's possible we may reverse here, but I'm thinking it's very, very possible we won't. And if we don't, then we could go significantly higher. And I was wondering about a possible retest of this high here at 114.75, and that could make the second low of a double bottom. Now, we do have a couple of resistance levels on the way. First off, if this is a megaphone, and this wouldn't be a bad megaphone actually, then I've got the trendline resistance that I was talking about as a possibility back here when we were at 102, 103, is now up here in about the 109.5 area, and I would be watching that for potential resistance. That would be most likely if we were doing an ABC flag, which obviously is would be a reversal of a kind back down, but wouldn't be the kind of size pattern I'd really be looking for here. The size pattern I'm really looking for would be one which would get us back into the 80s. And if we were to do that, then we would be going break down below 99.22, and that could get us back into basically the 85 area. Would that be particularly low on the bigger picture? No, not particularly. When we were bottoming out in 2008, 2011, that was like 71 to 73 area. So that's not a huge reduction. And the biggest support level and resistance level, old resistance level, new support level, I've got here is 87, 89, and that might be a level to find support. Although obviously, depending on what happens over the next few years, it could go lower. Is there much chance that it would go higher? Well, possibly. But I've got a beautiful megaphone here. It's really nice. I'd be disappointed to see it break up, but of course the resistance trend line is now in the 120 area. We could go significantly higher. Is there much of a case for that? Well, higher yields on bonds make it more attractive to hold treasuries, and that makes the dollar more attractive. That was the rationale behind the move up today, and it's not a bad one. We'll see how it goes, but I am wondering whether we might make the move to that retest of a 114.75. Not many people I was wondering about this when we were here, this move here, and not many people were thinking about a big rally then. The dollar sometimes just doesn't do what it's supposed to do and heads off in the other direction. I'm thinking it may be heading off in this one. All right, looking at TNX. TNX, possible RSI 14 sell signal brewing here. You can see the double top here has likely failed, but we haven't quite reached the level here. That's why I was had in my mind that ZB hadn't quite reached it, because it's TNX that actually hasn't quite reached it. In terms of what we're looking at on the bigger picture, though, this is a very nice bull flag. We'd already seen a slight break up from it, and I was saying if it can follow through to the upside, then the obvious target would be, and the flag target would be, a retest of this high here at 49.97. I'm thinking there's a pretty good chance we're going to be seeing that over the coming months. And might be quicker than I expected. And when we get there, we're going to have a very big inflection point. And that big inflection point is going to be looking at basically this. And remember, this vast move was the last rally in bonds. This is the move down in bond yield while that was happening over a period of 40 years. Now, the move the other way doesn't tend to last as long. We tend to be looking at 10 years, 15 years, but there's still another 5 to 10 years to go in that. And in that period, I would expect this to go significantly higher, and it could be that we're going to do that sooner rather than later. Now, it depends. I mean, obviously, there's many views on what might happen on tariffs, and you never quite know what will happen until someone actually does it. But generally speaking, math suggests that using tariffs in a big way is going to put up inflation. When inflation goes up, interest rates go up. People will expect more for their money when they lend it and buy treasuries. And the fact is, the Fed tends to put interest rates up because it wants to bring inflation down again. So when we reach the retest here, that could be the second high of a double top, and it would be a decent sized one. Or alternatively, we could break up. And if we did break up, I've got a potential inverse head shoulders here. It's not great, but it hasn't failed, and it is valid, and it's got a target in the 8 area. We could be heading up to there. That could make life extremely interesting. I'm thinking life might get very interesting on the bond markets and the equity markets over the next 2 or 3 years. I've already done a post on bonds, and I'm going to do more on that. But really, in terms of the bear market on bonds that we're in at the moment, we shouldn't be done. There's no reason to think that we would be done to the upside on yields. I'd really be expecting more. We got on the last one, 10-year yields made it all the way up to almost 16%. I'm not saying it's necessarily going to get there this time. Obviously, they were not that good at responding to inflation last time, but I'm thinking 7 or 8 might be doable. So I've got a pattern pointing there. And if the cards fall the right way next year, we could see that. Also, the other thing is there are very ambitious spending plans that are being talked about by the new administration, extension of the temporary tax cuts and so on. And it does strike me no one's really thinking about like balancing the budget or the national debt, and sometimes it doesn't usually happen in America, but the last big instance I can think of is when Liz Truss became Prime Minister in Britain. She came up with some very, very uncosted plans, and then interest rates doubled, the currency crumbled, the bond market was very unhappy, and she was out of a job in 3 weeks. Now, Trump wouldn't be out of a job, but he might be thinking, I'm going to think harder about what the bond market wants next time. Because ultimately, if the bond market doesn't think you're going to pay the money back, then it's going to demand higher interest rates, and it's going to be more reluctant to buy your bonds. Ultimately, interest rates are set by the bond market. And irresponsible spending plans, especially from a country which is now number 16 in terms of GDP of the most indebted countries in the world, not in particularly distinguished company, then the fact is the bond market starts laying down the law. And I think that may well happen next year. That in that crisis, you would expect interest rates to rise a lot, and they could reach 8% quite easily. So we will see how that goes. All right, great. Let's have a look at KC. Okay, we did see some interesting stuff on the currencies, by the way. This was Euro USD coming back in to retest the low. Hasn't quite made it. Likely goes lower. GBP likely going to retest that low too. USD JPY. This on the bigger picture actually has quite a long way to go. Whereas USD CAD is now far. CAD is looking very weak at the moment. Yen has been holding up much better. I think the political situation in Canada is kind of a mess. I don't think Trudeau's been impressing anybody. So, but anyway, they're interesting. But I would say that we're pretty close to major low retests on both Australian dollar and NZ, and I'm wondering if we might find some support there. All right, looking at KC. Well, the big story on coffee is crop failures and the impact those might have. I think that's likely to put a bid under coffee prices. I'm not really expecting to see much of a retracement here. We will see. All right, SB. Now we saw some significant downside here, and we're consolidating around that. But this may not be a bull flag consolidation after all. It wasn't. We never had the trend lines for a particularly good flag anyway. But I am wondering. I've got a fairly apocalyptic scenario where we could be forming a head and shoulders that could take sugar down to 9. I'm not expecting that to happen, but we could see that form break down and then go back up again. We will see. But at the moment, bigger picture, smaller picture, we've got a possible 60-minute buy signal brewing, and I'm leaning towards seeing a rally, and this looks like bottoming action, potential little level bottom. Bigger picture, we will see. CC, there are worries about CC supply, and this isn't the first time it's been up here in the last 2 years. I think we reached about 14,000 about a year, 18 months ago. We're just coming back and retesting that level. All right, CT. CT, I was expecting a retest as low, and we've seen it. This is the second low potentially of a double bottom. Lumber. Sorry, that's not lumber. That's wheat. Okay, sorry. On wheat, I was expecting to see a retest this low, and pretty much we retested it. I was talking about a possible ABC flag forming on corn, and we got it. So we will see. We're coming back in for a test of monthly pivot, which is a very obvious level to find support. And soy, I was expecting to see a retest to this low, and we went straight through it. This is not the second low of a double bottom. I am wondering if we might find support soon, but let's have a look at those on the bigger picture charts. On lumber, we had a buy signal, and wow, I was expecting to see a rally. That was very fast. So that's converted the weekly pivot at the moment, and it very, very suddenly did basically a 50% retracement of this whole slow move down. That might be it, I'm thinking. We will see. On live cattle, we had a double top which had broken down. We've made the target, holding the monthly pivot as support. The sell signal has made target. There's no particular reason I can see to go lower. On lean hogs. That was live cattle, by the way. Lean hogs, this still looks like a bull flag forming, and we're reaching a support level here around the 82 area. So I'm thinking this would be a pretty good level to go back up and retest that high. All right, let's have a look at those on the bigger picture charts. KC. Possible RSI 14 sell signal brewing, but I don't think the fundamental situation basically is that the crop looks as though it's going to be significantly smaller than expected. That's likely to put the price up. Sugar, this is going lower than I expected. We broke the trend line I'd drawn on the daily chart here, but you can see we're getting kind of out of proportion here. If this is a bull flag, then really it should have turned up by now. I'm wondering if we might be heading lower. I'm working out some of the longer term charts on these, and I'll be showing that next time, but I do have a setup where this could go particularly quite a long way lower. I'm aiming to show you that on Sunday. On CC, a lot higher again. There are concerns that there's going to be a significant shortage, so it's going up on that. On wheat, we've got an RSI 14 buy signal fix. I was looking for a retest of this low, second low of a little double bottom, and we got that. I'm thinking we may well find support here. On corn, I was looking for an ABC flag. We got it. I would note, bigger picture, this could be an overall bear flag forming. But in the short term, within that flag, we could certainly head up to the 460 area and maybe test this declining resistance trend line, which would be an interesting test to see. Looking at soy, we've got bigger picture. I just wanted to retest of 973 really. We went all the way down to 950, so obviously it went significantly further than that. This could still be a double bottom, but I am wondering much more downside, and I'm going to be writing that off as an issue, and I will be talking about an alternate scenario I've got on the bigger picture charts. On cotton, no current divergence, but we do have pretty much a retest of this low here at 67.9. Low here today was at 68.05. So I'd expect a little lower, and this then has a pretty good shot at being a double bottom for a significant move higher. We shall see. All right, great. In that case, I think that's a wrap. Should be an interesting run into Christmas, more interesting than I was expecting. So I'm planning to do a post tomorrow morning talking about the targets, downside targets, ideally on the indices and the patterns we might be forming. So watch out for that. All right, great. Everyone take care. I'll see you again on Sunday.